Hello and welcome to Winch Financial. If it's Monday, we're talking stocks. I'm Laura Biskupik. I'm the marketing director here at Winch, and I'm here with Christian Peterson, who is a CMT and an investment analyst. And this week, China is weighing heavily again.
Yes, it is. We've been talking about this for a couple of weeks, and last week they came in with somewhat of a bombshell. The yuan, their currency, was devalued about 2% in one day. Now, 2% might not sound like a lot, but for a currency move in one day, that was a big move, and it had markets and investors very worried that this was going to be a round of currency devaluations that would take place around the globe. What is called sometimes a currency war, that countries devalue their currency in order to gain market share, because when you devalue your own currency, your exports become cheaper around the world. And this happened a week after China had announced a huge drop in their exports, an 8% drop in 1 month from the reported time of the month before. So the timing was very suspicious. They had this drop in exports, and then they come out with this currency devaluation. And so there was quite a scare there. But later on in the week, the yuan did stabilize. Global markets did stabilize, and the Chinese government did come out and say, no, this is not part of a currency war. This is not what we're getting into. And in fact, it really did have a good side to it. What is really happening in China is they want their currency to float on the market, to be determined more by market forces. So we all know that the Chinese currency has been manipulated, heavily manipulated and controlled by the Chinese government for decades. But they're trying to liberalize their markets, and one of the way to do that is through liberalizing their currency. Well, the effect of that was to have it drop, and it did drop, but it did stabilize. So in the end, this is probably good news that it's happening, that China is becoming more of a liberal market. They're opening up their markets to more competition, opening up their currency to forex trade on the global market. So they're becoming a part of the global community in the way that they hadn't before. So in the end, this is good news. And indeed, markets, the U.S. markets here, after dropping about 1.5%, ended the week up. So it certainly was a scare. It's out there, but not as dangerous as first realized.
So that is weighing on the mind globally. And then here domestically, we're still looking at what the Fed might be doing in September.
Yes, a lot of questions about that with the currency devaluation and evidence that the Chinese economy is slowing down. Should the Fed be raising interest rates in this environment? Now we're coming up to September, we're getting into late August, and since the beginning of the year, that has been the target that people have looked at, that if the Fed is going to raise interest rates, they would most likely do it at their September meeting. So this had people asking the question, are they going to do it? Are they not? We still don't know. They keep their cards close to their vest. They're not going to tell anybody until it actually happens. The economic data here domestically has still been mixed. We're still getting strong employment data, some good housing data, but still manufacturing and other data are not so good. So it's an open question, and one that we're going to be obviously looking at very closely. My best determination is that I don't know if they're going to raise. I'm not going to speculate as to whether they do or not. But what I will say is that if they do, it's certainly going to create volatility in the markets of the kind we saw last week. But I don't see it having lasting effect. There'll be volatility for a week, 2 weeks, maybe. But in the end, Janet Yellen has been expressing that even if they do begin to raise rates soon in September, that the trajectory of those rate increases are going to be very slow and measured. And so short-term volatility, but in the long term, markets will stabilize and get used to it. I don't see any drastic drop in the markets. Short-term volatility, but long-term stability.
Okay. And certainly we've had enough of warning that this is coming.
Yes.
We're talking about this for months. So, and we
Right.
may be talking about it again next week.
Probably.
And other drivers for the market. So join us next week. We'll be here and we hope to see you too. Thanks.
Bye.